Welcome to Daxue Talks, a show powered by Daxue Consulting, a China-based strategic market research company founded in 2010.
Hi, everyone. My name is Steve Hopkins. I've been operating within the Chinese FinTech industry for the past several years, working at Chinese hedge funds, robo-advisors, cryptocurrency investment banks, and wealth tech startups across mainland and Hong Kong. I've been studying Chinese language and culture for the past 10 plus years, and I'm the co-founder of the China Guys. TCG is a firm full of professional China watchers that track regulatory, economic, and policy updates within China's business landscape and present them in digestible, bite-sized pieces through newsletters and research articles. For clients with more specialized needs, we also provide tailored consultative services within the Chinese market. We're newly started, but I would love if anyone listening to this would check us out at thechinaguys.com. I'm excited to be presenting this talk for Daxue Consulting, and let's get started.
How is blockchain currently being used in China's banking sector?
Right, so obviously the Chinese government on both a national and a provincial level have doubled down on their focus, on their priority to the continued development of blockchain technology. And so because of that, there's really been developments in just about all fronts of the financial industry with regards to blockchain technology, from cross-border payments and trade finance to asset management, or wealth tech, as you may have heard it called, and supply chain finance. And so, a common example to go to is the PBOCs, the People's Bank of China, their efforts to develop a digital currency tied to the value of the RMB. But a lesser known about use of blockchain technology is for the industry called supply chain finance. And I think it's actually pretty interesting and something that hasn't gotten as much press as the digital RMB. So I'll give that as an example for now. So within supply chain finance, there's a huge issue that there's a lack of reliable and transparent methods for SMEs deep within a large corporation supply chain to access liquidity through loans, through factoring, any sort of financial services like that. And so right now, the banking arm of Ping An Insurance has an interesting solution that they've taken to approach this issue. They're using blockchain technology to track transactions deep within corporate supply chains to allow smaller SME suppliers to use the reputation of these larger corporations to access liquidity. And I'll explain what all of this means. So let's take this, put some names to this example. You have a well-known auto manufacturer, let's say Nissan Motors. Nissan is what's known as the anchor corporation, or the top-level company that's coming out with a final product and is at a level of operations that a lot of these financial institutions trust that they're going to pay their debt obligations. So basically, if Nissan says, yes, I owe you $10 million, they're going to be good to uphold that IOU. But Nissan has, to assemble a single automobile, they have multiple tiers of suppliers that they source all of their materials from tires to windows to auto chassis. So let's chase that out a little bit. The chassis manufacturer that Nissan is supplying from, they'll also have multiple suppliers that they're sourcing their fittings from. Those suppliers will have suppliers that they source their sheet metal from, and it goes on and on. So realistically, if you chase this out for all the components that are needed for Nissan to create a single car, you're looking at a pretty tangled web of very deep tier suppliers that typically get smaller and smaller and smaller in operations the deeper that you go within the supply chain. So bringing this back to what Ping An's doing, what a blockchain-based supply chain finance platform can do is provide the infrastructure for an ecosystem where all these suppliers can be onboarded, and the flow of goods and transactions from bottom to top can be tracked and verified. And so at the end of the day, this sheet metal supplier from our example can go to a financier, let's just say HSBC, and basically take the IOUs that Nissan has transferred down throughout its supply chain from Nissan to that auto chassis supplier, to the sheet metal supplier. And they'll be able to take it to HSBC and say, I've received this IOU from Nissan for $10 million. And because they have all of these verifiable records of the movement of these goods and transactions, HSBC's risk of saying yes and providing that money up front to these smaller SMEs is very much lessened. And so because of that, they can cash out these IOUs and provide these SMEs much easier and reliable access to capital as a result. So again, this is just a very long and drawn out example of the power that blockchain technology can bring, and particularly, kind of the diverse use cases of blockchain technology within the banking sector. Again, not only in China, but within the global financial system.
Any questions? We will find an expert to answer them. Drop your questions in the comments or send us an email, dx@daxueconsulting.com.